Yeah.
Welcome everyone to the live stream. This is Ask a Loan Officer. Here with me today, I have another loan officer and then also somebody who can help you navigate student loans along with getting a mortgage. I will introduce them here in just a second. So how this is going to work, you're welcome to ask your home buying questions in the chat. So we're going to be going through these line by line in order as they come in. Really quickly though, there is this feature on YouTube called a super chat. And if you want to, you can pay to have your question bumped up to the top of the line. You absolutely don't have to. We're going to get to as many questions as we can. But just really quickly wanted to thank Andrew and then Chillin' always, thanks how you say that, for the super chats on last stream. So I want to go ahead and introduce to you the two guests that I have here with me. And we're going to spend the next about 15-ish minutes talking through student loans and how it relates to mortgages. And so that's why we have Catalina on here with LoanSense and then Dan Frio as well. I'm on Dan's team. Dan and I are both licensed in all 50 states and can help you get a mortgage. And Catalina can help you navigate student loans along with buying a house. So Catalina, could you give us like a quick intro of what you do, how LoanSense works, and how you help people with student loans qualify for a mortgage?
Yeah, absolutely. Thanks for having me. So essentially what we do here at LoanSense is we help borrowers, mostly primary purchase market, which means you're buying oftentimes buying your first home. We help them understand how adjusting their student loan payment through various federal programs can help them adjust down what's called the debt to income, and as a result, afford a home or afford more home. So we work with borrowers and help them understand. We enroll all the paperwork as well as work with their loan officer to help them navigate as well as get the documentation they need to get through underwriting in the home buying process. So they may go to a loan officer and get an approved amount, and then once they work with us, they can get contingently approved for a different amount based on adjusting their student loan. So that's how we work with consumers. We help them navigate the student loan side while also helping their loan officer understand the implications to the underwriting by accepting this new payment that we help the consumer or the borrower get into. So that's what our company does.
Yeah. And I know I've had quite a few people from the channel who have connected with you. I think one of the biggest benefits, or one of the, I feel like the best case studies that we saw. Do you remember that client who had somewhere around, it was like $300,000 to $400,000 of student loan debt that was medical?
Yeah, absolutely. So the biggest use case I would say is for people who have, let's say you earn $80,000 a year and you have about 60 plus thousand of student loan debt, which means you have a high student loan balance relative to your income. Those are the best use cases because those are the use cases where the payment, what in which the government says you can afford, is significantly lower than your fully amortized payment. And as a result, we can get you into that plan and then get the necessary documents from your servicer to help you get a mortgage with that lower payment. So now you can actually afford a home, right? Some of our best, actually, Kyle, a lot of the users from your channel that come through, not just have a high student loan balance, but oftentimes have been denied a mortgage before they find you, and then of course find us. They've actually been denied 2 or 3 times, and they haven't given up, right? So they're coming out and trying to learn more, and then we find out, wow, they've been denied a mortgage like 2 or 3 times prior to finding your channel, actually. And that's actually the most common theme between the people that we see that come from your channel.
One thing too is I
Yeah.
wanted to note they don't have to use this service. They can use the service even if they're not getting a mortgage. So anybody out there with student loan, a ton of student loan debt, and you're just struggling, please look at the service. It wasn't intended strictly for those looking for a mortgage, but it does really, really help when you're getting a mortgage to use this system. It really does. Catalina just helped me out with a young lady who had $200,000 in debt, like you were talking, Kyle, and we were able to get her payments from 2,000 and like 2,200 to like $180, and
Yeah.
She'll be getting done through our system here, I think, in about a week. So that was
Yeah.
fantastic.
And
It's amazing.
and we'll go through a student loan calculator that LoanSense and Catalina made. I did put that in the chat. I really quickly want to acknowledge some of the people who have already commented in here. There's already great questions. And we're going to get to these here in just a second. So Cade, welcome. I'm so bad with names. I do not know how to say this, but welcome. Thank you for your question.
Raquel, is that it? Rashna Raquel. I'm guessing.
Close.
Sorry.
Joshua, Julie, Bridget, Brittany, Leafy's Lizard Squad, Hiss. It's a great name. Frankly speaking, that guy, Rye, Eternity, Chris, Julie, Travis, Daryl. Thank you all for being here. We have one question I do want to tackle really quick before we get into a pretty big student loan update that just happened like 50 minutes ago that I want to cover here with Catalina. Is Joshua asked, when concerning debt to income ratio, which for those of you who are new to the mortgage world or home buying world, the debt to income ratio is what the lenders use to see how much house you can afford. It's a percentage of your monthly income that they're going to look at how much debt you can have, including your future mortgage. So student loans are included in that as well. So a higher monthly payment on your student loans decreases how much house you can qualify for. So when concerning DTI, do lenders always look at an income-based repayment?
So right now, since we're in pause, that's actually part of the update. So I can address that update at the same time as answering this question.
We need like a drum roll or something. This is huge news.
I know. Woo! Yeah,
I need to add that in my little soundboard thing.
Yeah, we're paused. President Biden just announced we have a student loan pause until June 30th of 2023. And the reason I want to talk about that is because during this pause, lenders and loan officers tend to use 1% of your entire student loan balance, which means if you owe $100,000, then they will count 1,000, or if it's according to Freddie, FHA guidelines, it will count 0.5%. So that would be $500 on the example of the 100,000, right? However, if you are on an income-based or income-driven plan, I like to call it income-driven because income-based is just one plan type of many, then and you're actually in repayment, the lender can actually use that repayment amount. But the key is you have to be in repayment. So that will allow the lender to use your repayment amount in lieu of the 0.5 or 1%. And that's the biggest caveat to this payment pause right now, because most people are not repaying, so they will use 1% or 0.5%. And that's why we encourage people who have, like, if you're the $100,000 borrower and your actual payment is like $200, you don't want them using $1,000. You want them using the 200. So you should kick yourself back into repayment, and no one can force you to stay in pause, right? So you can.
And if I can interject really quickly, I think that example you talked about there is huge, and for like we understand it on the loan side, but that $800 difference that you have in that savings on your payment, going from $1,000, which a lender would use 1% of the balance to qualify for something like a Fannie Mae conventional loan, versus your payment being at $200 per month. $800 in difference there is going to be probably around $100,000 in buying power. So that means if you really want to buy a $400,000 house, maybe you could qualify for that. But having that $800 extra count against you would reduce your affordability down to $300,000. So this change here, just in these like small changes in the way that you work your student loan program, can help you qualify for more. And like you mentioned, you're not stuck into that payment.
Right. It's not like you're forced to only pay that amount or be in that program forever. You're doing it to optimize how much you can afford, and you can always re-strategize your student loan plan after you close, and you readjust your budget, and you see what is the cost really of home ownership, and can I afford more? Can I do something else? You can rethink that post-close, but now you actually have a vehicle to build wealth instead of get stuck paying something that may not lead to building wealth. You already got the value, right, of the education by coming out and getting whatever job. So now how can we best work our student loan? I'm not trying to say to go out and get the most expensive mortgage, but just understand your options. And I know right now with interest rates so high, it's good that borrowers understand their options in order to actually be able to buy a house and afford one.
Yeah. Joshua did follow this up with it was the same question initially, and then are there any loans which must calculate based on the 10-year payment amount?
No, because you can always enroll into a different student loan repayment plan. So if your student loan repayment plan is not the 10-year standard plan, which the government automatically puts every single person in, even though more than 50% of borrowers cannot afford it, and to afford to pay their student loans in 10 years, there you still automatically get put into it. But no lender says because you're automatically put into that, we have to use that 10-year fully amortized standard repayment as the DTI calculation on your mortgage.
Yeah. Cool. I'm going to see here if we have any other student loan questions. So we're going to answer student loan questions for just a little bit longer as Catalina's on here. And then also you do have a YouTube channel as well where you cover all these updates as they go. So you can just search Loan Sense on YouTube. But I don't see any other student loan questions. So I do want to hop over to this calculator, and you can use this. It's at... I got to find one of the...
Actually, while you pull that up, could I give a really brief update on some of the, besides the payment pause? There, of course, is the payment pause, like we just talked about, June 30th of 2023. And I also want to mention there's a few expanded program reliefs that Biden has funded, including what's called the IDR extended waiver program. So that means at any time, if you've enrolled in income-driven repayment at all to reduce your payment, they are now recounting the number of payments. So if you've been in forbearance, they will count all that time you've been in forbearance, including these 3 years we haven't paid, towards loan forgiveness. That means that if you need to pay for 120 payments because you're a public servant, for example, these 3 years will all count towards that 120 payments, right? As well as any time you've been in forbearance. So that's huge because that could literally cut some people's payment time down by almost half, right? So that literally means you're getting half of the time you're supposed to be paying at $0 this time. We're paying nothing counted towards loan forgiveness. So it's a huge, huge value. Biden is is making sure that you can get all your payments counted towards that program. And there's also, if you've gone to a for-profit school, there is huge money going towards borrower defense, which means that there's a whole list of schools, right? It's on my channel. I have a video on this, but like Corinthian College, ITT Tech, specific schools where if you've gone to, you can basically get your debt discharged because they acted very predatorily in lending out student loans. So those are a few programs. There's a ton more, of course. You can learn more on our channel. But the reason I bring this up is because if you're in the home buying process and it turns out you qualify for one of these programs, you can actually get complete debt discharge. And you're actually coming out of our program owing $0 and now have taken that off your DTI calculation entirely, right? So it might take a little more than 21 days, but the value is huge. So I just wanted to throw it out there.
Yeah, and I see a couple people in the chat here too. Miss B, David, Travis is going to bring some of our Oregon slander here again, Dan. So we're going to get some, if you're ready for us to get chastised on the way we pronounce things. And Matt, the mortgage guy, good to see you here, man.
Hey, Matt.
Catalina, could you talk about what's been going on with the different lawsuits that have been happening against the student loan forgiveness, and where do you see, like, are those being resolved, or what do you see happening in the future with those?
Actually, it's funny. I just filmed a video today, so it's going to be coming out tomorrow on this, but I definitely want to provide an update. That's the reason the payment pause has been extended till June 30th, is because 6 Republican-led states essentially sued to stop the forgiveness. And there's been a lot of other lawsuits, but they've been deemed, basically the proof is you have to prove it's harming you. It's going to harm you through this program of loan forgiveness is going to harm you. You have to have harm in order to file the suit. And 6 states came, a judge in Texas basically said, okay, we'll hear the case. And so now the Department of Justice is essentially appealing the decision to hear the case. And it sounds like it's going to probably be going all the way up to the Supreme Court. And so that's why the payment pause has been extended. But you know what? The Department of Ed sent out a letter to not to all 26 million, but 26 million people actually filed that application. And they already reviewed 16 million. And of the people who are eligible, they already sent an email out saying, you are now eligible. We just have to wait until we get over this lawsuit hump, and we will send this information to your servicer, and there's nothing else you have to do. So there's a ton of you that may have already gotten that email that basically says you qualify for the 10 to 20,000 of relief. They just can't do anything until the case is successfully appealed and heard, probably at the Supreme Court level. And that's why they extended the payment pause until June 30th.
Yeah. Real quick, I do see a super chat here from that guy, Rye. Dan, that's actually on your channel. So we'll get to that here in just a second. I do want to show you this calculator here because I like calculators a lot. And this one is really cool.
He does.
It's a real problem. So you can go to winthehouseyoulove.com/student. There's also a link in the chat. And what this is here is this is the student loan calculator that LoanSense has, that Catalina created. And could you walk us through what's the
absolutely.
average situation that most people have?
So I can tell you the average that come through well, we could use the average in the market right now. I don't know if you know, but the average buyer is earning around $71,000. It actually came down by $16,000 compared to last year. The average student loan debt for the people that come through our platform often is their balance is about as high as their income. So you could put about 70,000 for the most part, the people that actually move forward, right? You don't have to put anything there. Put a car payment of 407 because that's the national average car payment. And put 6.5% student loan. That's the average grad school debt loan. And we could do advanced settings if you want, but I put a family size of 4. So if you're married with 2 kids, or we could do 1, whatever, but and we can change some of these ratios if you want. I mean, obviously mortgage rates have gone up, so
I think 45% debt to income sounds pretty fair. 30 years, what most people are getting. On the interest rate side, it's probably going to be closer to 6.5%.
Yeah.
Obviously, depending on kind of where you're at with credit. And down payment for a first-time home buyer is 3% on a conventional loan. So I think that sounds pretty fair. Would you agree with that, Dan?
Yep. Right on.
Cool.
So then click expand, view details. So then what happens is we show you and I know the super chat before that guy, Rye, he asked about the 10-year fully amortized 10 standard plan. So what we do is we show the 10-year fully amortized standard student loan plan against what the government says you can afford to pay. So the 10-year fully amortized student loan plan, if you owe 70,000, is around 795, sorry. And the government says based on your family size and based on your income, you shouldn't be paying much over 264. So as Kyle said earlier, if you lower your student loan payment by $531, if you can see minus, what does that do to your boosted affordability? It boosts your affordability by about 60,000 with the mortgage product we put in, right? So the point is this can now increase your overall mortgage loan amount from 66,000 to about 227,000, and that monthly payment goes from about 1461 to 1991. Again, not saying we all have to optimize and get the biggest mortgage, but it's good to know what right sizing your student loan looks like in terms of affordability.
I think that's a huge point too, because I know a lot of people can see this and say why would I want to just take on an extra $60,000, or why would I increase my purchase price that much? You absolutely don't have to. This is for people who are in the situation where, like you mentioned, the student loan is as much as their annual income, and you have all these other expenses that you're paying. So if you're running into a situation where student loans are preventing you from being able to qualify for the house that you want, you could look at this as a solution. And what I really like about what you guys do as well is this isn't like a refinance. Could you explain a little bit about what happens after this? Because I don't want people to think this is just, you're going to refinance your loan. And a lot of people are rightly so hesitant around refinancing or consolidating their student loans because that's not what's happening in this case.
Yeah. So number one, first of all, the majority of Americans do not qualify to refinance student loans. Like if you were in this case, the likelihood you qualify to refinance your student loan is actually very low. It's under 20%. Because you don't have the income, you have too high of a debt burden compared to income, and they view you as high risk. So they're not going to allow you to refinance. Refinance literally means privatizing your student loan and rolling it over to a private lender. 90+% of all loans are held by the government. And what we're doing is we are allowing you to enroll into a government program based on your income. And essentially, what you cannot pay after you have made the number of payments based on the program you enroll into, the government forgives your debt. And so the idea is that the government is, it's how we've chosen to fund our higher education. We say you take out a loan, you borrower, but if you can't afford to pay it, we will subsidize the interest month over month, year over year, until you're done with your part that you can pay, and we will forgive it. And so, what's really good about what we try to do is allow people to estimate really quickly. But then, once they click sign up for Loan Sense, that button right there, then they can actually go and sign up for an account and get a very complete break. It's kind of, you have to create an account and you have to answer 7 questions. You connect your student loans, and we give you a much more accurate recommendation based on every single loan type you have. And then you can speak to someone. We can assign you someone to actually walk through all your student loans. And we don't ask, we basically give you a completely free analysis, with a very comprehensive analysis, once you sign up and connect your loans. And we want to provide education for free to make sure, everyone can get the best possible outcomes, based on their situation.
Yeah. Awesome. So yeah, you can go to winthouseyoulove.com/student. If you would like, I think I put those numbers back in there, right? If you'd like to try out this calculator for yourself, it's free. Play around with it. Test out putting in different credit card payments. Test out, what would happen if you took off a chunk of your student loans, and see how that changes things. So Catalina, people want to connect with you. Where can they find you?
Well, you can always, the best way, the best way is through our customer support. We have a live chat on our website, myloansense.com, if it's within business hours, or email info@myloansense.com. Of course, you can follow me on YouTube as well. It's actually at Catalina Kai, and I can give you that link afterwards. Or you could search Loan Sense. Either one, it will come up. But the best way, yeah, we respond to all the comments, but you can always find us on our website or email us at info@myloansense.com. Website, myloansense.com. That's it.
Awesome. Well, thank you so much for your
If you're
time.
watching, I don't know, Kyle, you probably have it, but if you're watching on my channel, just look down below in the description, and it's the top line. It's the number one line.
Oh,
Guys,
cool.
we're just trying to educate those. Like my tag says, I'm here to educate and inform you guys everything real estate, but we focus on the financing piece of the puzzle. So we thought we'd have Catalina on because student loan for relief right now is huge. So thanks for joining us, and thanks for all your help helping us get set up with your accounts and all that stuff, because I think it'll be huge in the coming years. So thank you so much.
Absolutely. Love to help people achieve their goals. So thanks for having me, guys. Have a good one.
You bet.
Thanks for having me.
Thank
Right.
you.
Happy Thanksgiving.
You too.
See you, Catalina. Bye.
Bye.
That was awesome. I think a lot of people think that they have to get a mortgage, or they have to be applying for a mortgage to use this program. I'm even having my kids do it. They don't have a lot of debt because I paid most of it, but they do have some debt. I'm going to just see if what's there. But
cool. I do want to get to some comments here. Thank you everyone for being patient. I saw all your questions. We're going to go down here in a line as promised. I'm going to bump super chats up to the front. You don't have to pay, but if you'd like us to answer a question immediately, we can do that. So that guy Rice said, wondering if mortgage companies will be doing refinancing in 2023, 2024, if in a recession. If rates do come down, which often they will in a recession, refinance is very likely will be happening. Probably not at the pace that we saw the previous, this past year, when rates were coming down in like the 2 to 3, mid 3% range, when refinances were like absurd, how much was happening.
I mean, we couldn't staff high enough. But one piece of that question is, I think if in a recession, here's what's, if you've been watching CNBC and a lot of the financial news networks right now, even Warren Buffett's saying we're going to have a recession next year, and Warren Buffett is like the wizard when it comes to Wall Street. So the expectations are for a recession next year. I called it Q2 or Q3 of this year. But the last 5 recessions, just so you guys understand, mortgage rates have dropped, or on average, the last 5 recessions, both of them, the Federal Reserve overreached, and all of them resulted in a 1.8 average reduction in mortgage rates. But if you look at where we were and where we are, mortgage rates did hit about 7.375, and we're about 6.625 right now. So we are down about 0.75%. And I think once we see the inflation numbers starting to tick down and down and down, I think it's going to be a while for us to get into the 2 range, but I think inflation is going to drop to 4 fairly quick. And that's going to have basically take the Federal Reserve, let them take their foot off the gas pedal. So I'm expecting next year, and a lot of people are expecting next year rates to get back in the mid 5s. So anybody that closed like so far this year was in probably the 6s or 7s, they'll have a chance to refinance in 2023, probably the mid to later part of that, or going into 2024, because I think we're finally getting back to some stability. A lot of people are still saying the market's going to crash and all this other stuff, but I don't want to go, predict on the housing market and that. I just want to explain to you guys what happened in the last 5 recessions. And, basically everybody, and even the Wall Street execs now, are saying recessions on the horizon.
Yeah.
I'm sorry,
cool.
My head is so big. I need to sit back here, but my head is still big, so I feel like I'm taking up the whole screen.
You're good. I'll say I can, where's my thing where I can zoom in? Here, if you want, I can just go, I'll match you. Wait, it's not working. Who cares?
That's all right.
Cool. Let's play some comment catch up here.
Okay.
Because we have some people who have waited very patiently. We also have about 124-ish people on here. So welcome. Please ask your questions in the chat. Let's fire through these and see how we can help you out. Cade, does a realtor actually have to disclose if a house is haunted? Guess it may depend on the state. In my experience, this does depend on the state. In Ohio, you don't have to mention anything about that. And along kind of tangential to that is you also don't have to disclose if there was a murder. Or maybe not just murder, a death. Some people kind of really want to know if there was a death or if there was a haunting. I'm not aware of the haunting rule, but there are some states that do require disclosure of death in the home within a certain period of time.
I learned something today too then. Never knew that.
Are you familiar with the haunting thing?
No idea.
I never know how you could disclose like how it's like objectively.
I don't. It's not on a contract. It's not on the contract or anything, correct? Maybe some states.
It must be in some states, because I know in some states they do require disclosure of a death, and the only reason I know this is because like an agent in our office listed a home, and there was this like case that was pretty big locally, and there was like a very gruesome murder that happened. Like the son came in and like killed 2 of the family members, and inside the home, it was a whole deal. And like she listed the home, they had to obviously clean it all up and, do whatever crime scene process to clean the whole thing up. And she was like, do I have to tell people about this? Because I don't think people would want to know what went on here.
I never heard that.
Hey there. I am self-employed and I would love to buy a home around April, May timeframe next year. Do you have any advice for someone who has been self-employed for 3 years to buy?
I'll take that one if you don't mind. Well, you have to file 2. We need 2 years of tax returns, so that you're probably getting right into that spot right now. What I would suggest you do is don't go crazy when it comes to write-offs, because when you're self-employed, you file either corporate returns or you file Schedule C or E. I always get confused on those.
C.
But a lot of people so Schedule C. So what you're going to do on that when you file, as you probably are well aware, you're going to put your gross receivables, then you're going to do all your write-offs and then your net income. Please don't go nutso, because we all want to pay zero in taxes, but it's going to haunt you when it comes to mortgage time or loan time, because you can't, if you write it all the way down to zero, then you're not going to be able to qualify. So just think of it this way: the less you write off, the more income you're going to have, the better off you're going to qualify. But the bigger the tax burden.
Yeah. And if you can't qualify with the write-offs that you have, we do have some programs that look at bank statement averages. So they'll look at deposit averages in your bank statements, either for the past 12 months or 24 months. And then they'll usually apply an expense ratio to that. So let's say you had an average over the past year of $100,000 in your bank account that was deposited in. They might apply something, if you're like a real estate agent, they might apply an expense ratio of 10%. So they could use 90,000 for that annual income. In other industry, it really depends on the industry. Most of the time when they aren't familiar with the industry, they're going to use an expense ratio of 50%. So you'd only be able to use 50,000. But there are a lot of people who make 100, but to the government, they make like 20. So feel free to reach out to us. You can go to winthehouseyoulove.com, schedule an appointment with somebody on our team here, or you can start an application. We'd love to take a look and see how we can help you qualify if that's what you're looking to do. Julie, thank you for being here and commenting. You said, is it wise to wait to purchase a home? Really, I think that one of the biggest considerations in buying a house is that it does not have to be an investment. There's a lot of people who recently have been, I feel like they tried to turn buying a home into something where you have to make money. For me, a home is more of a quality of life change than it is about, am I going to make money on this house? And I have always had 3 rules for when I think it's the right time to buy a house. This is what I use for myself and what I suggest to my friends as well, is number 1, making sure you can actually afford the payment, that you're not going to stretch yourself thin with the payment. Number 2 is having reserves in your bank account. So when you close on your home and you pay for your down payment and closing costs, you still have about 3 months of expenses left over in your bank account to weather anything like repairs that you need or any emergency that's going to come up, hospital bills, you name it. And then 4 is buying for a longer time frame. So planning to buy the home and staying there for at least 5 years is going to help you weather any downturn in home prices. That way you're not trapped in the home and you won't have to bring money to the closing table to be able to sell it if you need to get out of it. I think as long as you have those 3 things, you can search for the home that you want. And I really don't think you're going to end up in a bad position. If it helps you, I bought a house 3 months ago. So I'm taking my own advice. I was able to meet a minimum of those 3 things. And even in this market, I bought a house, if that helps alleviate some concern. Bridget, I would like to know if I could have more than one USDA loan at a time. Thanks. You can not have more than one USDA loan at a time. Brittany Cheng, if you bought a second property before selling the first, does only the principal and interest... Oh, Dan, you can't see these comments, can you?
No, that's okay. I can see them on my screen. Guys,
if I need to restate it, just let me know.
I'm doing this from my phone, so that's why I'm a little tweaked today. So,
if you buy a second property before selling the first, does only the principal and interest of the first mortgage count towards DTI, or do property taxes, HOA fees, mortgage insurance also count as a debt?
Everything counts until you sell that property. It's a debt for you because we don't know if and when that property is going to sell. You got to think of it. Even if you have it under contract, the contract might fall through. So we have to take basically the worst case scenario in that. So I don't mean I can elaborate on that, but I know we got tons of questions. It's a holiday week, so I'm gonna refrain. You guys are probably excited because those are coming from my channel. Are probably they're like, hey, does Dan have a cold or something? Because I usually sit here and just ramble.
Well, I saw someone commented. They were like, "Oh, Christmas came early because we did the stream today instead of tomorrow."
Yeah.
Leafy's Lizard Squad. Can I buy a house with $20,000 in cash? I'm assuming you don't mean the purchase price, although I haven't looked at some of those homes in a while. There were some homes around here in Dayton that were like $20,000, like total. Wouldn't recommend buying a home like that. But can you buy a home $20,000 in cash with your down payment and closing costs? You absolutely can. So there's several different low down payment options. You have a conventional loan, which is a 3% down payment for first-time homebuyers. So for instance, let's say you're looking at, let's say a $400,000 house. So 3% down is going to be $12,000 as your down payment. Now you do have closing costs added onto that. Closing costs, general rule of thumb, going to be around 3% of the purchase price. Your closing costs are going to include things like whatever your lender charges, also any recording fees for the county that you're in, any tax like transfer taxes, if that's applicable in your state. You're going to pay for homeowners insurance. You're going to pay for a title company, an appraisal, a home inspection. But as this market is switching from being pretty heavy on the seller side to being a little bit more in a buyer's favor, you can start asking for seller credits. So on a conventional loan with 3% down, you could actually ask for the seller to give you 3% of the purchase price towards your closing costs. So if you can negotiate that, and that's something your agent can help you with, you effectively could be able to purchase a $400,000 home with 3% down and have very little closing costs that you would need to pay out of pocket. And it's very possible the seller credit could cover all of your closing costs. So all of this can be structured. Yeah, go ahead.
One thing is, he mentioned in there cash. Please don't, you can't use cash for anything, basically. You have to get it into a bank account somewhere, because we have to what's called source and season your money. And if it's not in a bank account that we can show it's been there for 60 days and so forth, you can't use it. So if you are sitting on cash, please get it into the bank or get it into an investment account or something so we can start tracking it.
Yeah, and so if you do have that cash and you want to use it and time is on your side, if you're like, I want to buy in 3 months, put the cash in your bank account now, because the underwriter is going to want to look at the past 2 bank statements, and they're not going to question a starting balance in an account. They will question large deposits. So that is something that you can do to have those funds seasoned, as Dan mentioned is the term for it. Frankly speaking, I've been recently rewarded a substantial amount of money from a workplace injury to multiple limbs. Oh my God.
Wow.
How is that going to affect my requirements for USDA or FHA? First of all, sorry to hear about that. I'm glad that you got a settlement out of it. You absolutely can use your settlement money for down payment, closing costs, really whatever you'd like. All that the lender needs to see is they need to see that the money came into your account, that you have access to that money, and they also need to see a statement of that settlement that you were awarded the settlement. So they can't use a promise of future money. They actually need to see that money in your account. But as long as you have it in your account and they can see proof that you got that money from a settlement, you'll be able to use that no problem. That guy Rye, hey guys, hope you're doing great. Thank you for going live. You are welcome. We're glad to help here. ATH, I see your question. Susanna Joey, Tiger Bites, make them say God. I'm always worried, like, you know those things when it's someone's like username, but then you say it, but then if you like say it slow, it's like it's something I shouldn't say live. I'm always like afraid. I'm always afraid that's gonna happen. So I'm like reading it in my head. Matthias Ozzy, thank you. We're gonna get to your questions here in just a second. Harry's 2014, thank you for being here. Can we ask for a credit buy down and closing costs? Yes, you can ask for seller concessions or seller credits. They're the same thing. Talk with your real estate agent. Talk with your lender if you'd like us to help you work through those scenarios. You can go to winthehouseyoulove.com. Schedule an appointment with us or start an application. We can help you take a look at those scenarios. You can also use the seller credit to fund a buy down, either a long-term buy down, taking your rate from, this is a example, not a quote, 6.5% to 6.25%, or a 2-1 buy down where you could take it from 6.5% to 4.5% in year 1. Year 2 would be 5.5%. Year 3 through 30 would be 6.5. So tons of different options that you have there. David, thank you for your comment. I'm going to get to your question here in just a second. Kat, welcome. Kat's in here.
She's in there. Hey.
Julie, is there still a first-time homebuyers program? You want to tackle that?
Yeah, so there's a lot of, I went on a Google search first-time homebuyer programs, and some of the things in there just, it's like, it's confusing. So that's why we basically started doing live events again. So to be a first-time home buyer, in many cases, you can't own a house for the last 3 years. So you couldn't have been vested in a home of any sort for the last 3 years. So it's really not to the point where you could have never had a house. So that's usually, what people are going after. But there is a program, there are some programs out there that will allow you to get into a house with little to no money down. So for example, if you're in a USDA area, you'd be amazed. Kyle, I don't know if I told you this. We just did a loan outside of San Diego. We just recently did a loan, and it was a USDA loan. Never thought it would exist out there. So it's 100% financing, meaning no money down. If you're a veteran, God bless you. You deserved it. You earned it. Use your VA benefits. I talk to people that are in their 50s and 60s. I'm like, they say they're a veteran, but they've never used their benefits. And I'm like, why haven't you used them? So there's a lot of programs out there for you guys to get qualified for, with low down payments and, basically a little bit looser underwriting standards.
Yes. John Kelly, thanks for the super chat. So I see your question in here. And just a quick rule of thumb for those of you who are just joining the chat, we're going to go down all the questions in order. If you'd like to bump your question to the top, you can use the super chat. You absolutely do not have to. We'll go down it in order, but that's a little trick you can use if you're like, please answer my question now because you want to go grab dinner or whatever you want to do. Being now 50 and divorced, my gross my gross monthly income is $7,200 a month. Through VA and Social Security disability. I only have $390 per month car payment and 3 credit scores are all above 690. What quadplex is my maximum amount? I'm seeking passive income. So first of all, I'm assuming that you're looking to buy a primary residence, meaning that you're going to live in one of the units and then you're going to rent out the other 3. If that's the case, you can live in there for a year and then move out, rent out the 4th unit without having to refinance. That is an option that you have. There was one other thing I wanted to mention in there. You definitely can do this with a VA loan. Since I see you get VA benefits, if you have VA eligibility, you can get a 4-plex with 0% down and use that income from the other units to help you qualify for that as well. To me, you seem like you're in a really good position having this amount of income, very low car payment if that's the only debt that you have. Credit score above a 680 is good. If you can get to a 720 pretty quickly, I think you're going to find a lot of savings in there. And we can take a look and help you strategize with that if you'd like. What I would do, I do have a calculator, but it's not public yet that does this. And kind of what I want to do is be able to make more stuff like this accessible to people so that they can just plug in their numbers and see a quick estimate. If we're going to run off of like really quick math here, what I would do is I would take $7,200 per month. And some of this is non-taxable, like the SSDI is non-taxable. And it's the VA, depending on your VA benefits, may be non-taxable as well. If that's the case, it can actually be grossed up. Let's just use $7,200 a month right now. So I'm going to take that. I'm going to subtract. I'm sorry?
My phone's
you weren't talking to me.
I'll be right back.
That's good.
Sorry, guys.
Dan's on doing the live on his phone because we had some issues earlier. If that were the case, I'm going to multiply that times a conservative number. I'm going to multiply it times 0.43. And let me do this so you can actually see my screen here. We have the YouTube live chat beneath that. So that's at $3,096. I'm going to subtract your car payment from that, $2,706. So theoretically, that's what we could look at probably as a very general maximum monthly payment for that 4-unit property. Now, you can also use the income from those other 3 units. So this can help you qualify for a lot more by being able to use that income and offsetting this mortgage payment. This is really rough math here. For a more thorough answer, what you can do is you can go to winthehouseyoulove.com and then you can either schedule a call with us and we can run through an application, or you can start an application. And someone on our team will reach out to you and show you how all this math works and help you see what the maximum you can qualify for is. Because I don't want to just like have you take a rough guess and then go purchase with a rough, or try to purchase with a rough guess. It's better to have solid numbers, see the full quote, and then use that with a pre-approval in hand to then take a look at some properties. Drew said all VA disability income is non-taxable. That's what I was thinking, but for some reason I was thinking there was one subset of VA disability that was taxable, so I didn't want to like blanket statement it.
If I can chime in on this one, this is a
Yes.
perfect example of when to use your VA benefit. Because if you bought this with the conventional financing, you'd need probably 20% down, a fourplex. But if you're buying it through the VA, you need no money down, zero.
Susanna, thank you for your super chat as well. Okay, so you have two questions in here. If you have young credit, Credit Karma says 3 years, and the only thing docking your score is medical collections, will that affect your mortgage consideration? Also, you followed that up with, I may be wrong, but I think I remember you previously mentioned they don't put medical bills into consideration. Do you want to tackle that?
Sure. So I'm not sure about the medical bills right now. Is that been finalized where it's not on your credit report anymore? Because it was close.
Yes, that has been finalized, and I'm trying to remember all the details from the top of my head. I do have a video about it. The medical collections is kind of like a two-sided thing when it comes to getting approved for a loan. And I just want to double check that was your question was about getting approved. If you have young credit, will it affect your mortgage consideration? The medical collections themselves, the monthly payment on those collections, that's not going to be included in your debt to income. The only problem with medical collections is even though those aren't considered, it still impacts your credit score, and the credit score is what's considered. So it kind of indirectly affects your approval. So it's not directly the medical problem or the medical collections fault, but the medical collections is holding the score down. So there are some solutions that you can take a look at. If you'd like, you can email me. I can connect you with a credit coach who can help you negotiate some of those things with the medical collections to see if there's a way that we can get those taken off. You can do a pay for a deletion, or if there's some strategies we can use to help speed that up a little bit quicker if you'd like.
Perfect.
The Muse. Thank you for your super chat. You said, hey guys, how long does it take to close on an FHA loan after the home appraisal? Kind of depends on when the appraisal was done in the process. In general, it's going to be pretty quick after the appraisal. That's one of the last big things that you need to finalize your loan. On average, 10, 15 days, would you say, for the appraisal, after the appraisal?
Yeah, because what we usually do is we'll usually get your loan approved first. I won't say usually, that's what we usually do. And then, because I don't want you to spend any money. Why charge you for an appraisal, go out and do an appraisal if we can't get you approved? So the biggest thing is we want to get you approved and have a conditional approval. While we're working on the conditions, like they might need an updated pay stub or something like that, we'll order the appraisal. When we're cleaning up the file, clearing all those conditions, your appraisal will come in. So right after the appraisal, in a lot of cases, within a week, we should pretty much be done. So right now, turn times are about 3 weeks.
Yeah. Cool. We got about 140 people here. So thank you. We're running down these questions as quickly as we can. I do see some people I just want to shout out really quick. Susanna, you are welcome. Jose, Champagne Poppy. I'm guessing that's not actually Drake, but it's possible. Drew, Elvina M, welcome. Travis said Christmas came early. I was looking forward to tomorrow, but I guess I don't have to wait any longer. Yeah, usually do live streams on Wednesday. But with Thanksgiving, figured we might as well do it a little bit earlier because people are traveling and hanging with their families and stuff. Darrell Taylor, after you've purchased your first home, how does it affect your debt to income ratio when trying to buy another home? And will you be able to qualify? Let's tackle the first question. So after you've purchased your first home, how does it affect your debt to income ratio when trying to buy another home? It depends a little bit on what the new home is going to be that you're buying. If it's a primary residence and you're retaining your current home, your mortgage payment has to be included in your debt to income, which will lower how much you can qualify for that new home. So your principal and interest, taxes, homeowners insurance, homeowners association, and then any mortgage insurance does have to be included in your debt to income ratio. If you're looking at buying an investment property, you can use future rent that you expect from that home. You can use usually about 75% of that to help offset the mortgage payment. That's usually the best strategy because sometimes having two mortgage payments in your debt to income really is difficult for a lot of people unless you have a higher income. Another thing that you might be doing is if you're buying a new primary residence and you're going to rent out your current one, then you can also do the same thing as well, where you're purchasing the new home, qualifying on that, and using rental income from your residence that you're leaving to help you qualify. If that's the case, you usually either need an executed lease agreement and a first payment on the home that you're leaving, or an appraisal called a 1007, where an appraiser comes out and looks at market rent on your home. The only problem with the 1007 is often those rents come in pretty low.
Yeah.
If you need that a little bit of extra boost, that can be tough.
Perfect.
Indentured Rebel. I love these YouTube names. Thank you for a super chat here. I was rejected by USDA due to self-employment loss. Is this factual? The lender gave FHA instead, which wasn't what I wanted. It really would depend on. So when you say self-employment loss, is the only income that you have a loss of from self-employment? Or do you have maybe W-2 income and then you maybe have a side business where you lost money on that side business? That clarification, I think, is going to be very helpful. I believe on government loans, a self-employment loss, even if you have other primary income, will reduce the income that you qualify with.
Correct.
I don't believe I believe on conventional loans that doesn't count.
No,
Am I remembering that correctly?
No, that should. I'm not trying to contradict you. That should always. I usually do all the taxes in the office when they come in. So I don't know why. The only reason why this might have happened was your debt ratio is too high. Once they took your loss from your business, you have to have other income somewhere, because you can't get a mortgage.
They said I also have a W-2. Side business was a loss.
Okay, so what probably happened was your debt ratio was probably too high for USDA, so they routed you to FHA, would be kind of the next step down. But if you want to check and see if we could be able to get you into USDA, lenders do make more money, believe it or not, on government programs. And sometimes some lenders might try to sway you from USDA to FHA. It shouldn't be common, but if you'd like us to take a look at it, reach out to Kyle and his team, and it'll probably work its way to me anyways, because I'll review your taxes. I'd love to review that for you, because if you can get into USDA, that means you have put no money down, versus FHA, you're going to have to put 3.5% down. So we'd love to help at least review that for you.
Do you remember what the ratio waivers go up to on a manual underwrite USDA?
I just had, they're really low. It's like 33, 40, something like that. 41 maybe. Where FHA can go to 57.
Yep. Yeah. Manual is going to go up to 41.
Yeah. Where FHA will go to 57. So that's probably why they did it, but that might not be for sure. So we'd love to take a look at that for you.
Yes. Susanna, thank you for super chats. Wow, we got a ton of those coming in. I've heard of folks applying for or receiving a mortgage and construction loan to renovate all at once. Can you pair construction loans with any type of mortgage like FHA and USDA? Yes. With a little bit of a caveat here. So, FHA 203K is a rehab loan. I don't know that you can call it a construction loan, but it sounds like what you're wanting to do is a renovate. I would use the word rehab as kind of what is used in the mortgage space for these types of loans, where construction is more used for like building from the ground up. FHA does have a 203K, depending on how much work you want done. There's one called a limited, which is below 35,000, non-structural, and one called a standard, which is above 35,000. And actually it doesn't have a minimum. But it's for those repairs normally that are above that and are structural or big changes. USDA does not have a rehab program that I'm familiar with. And if they do, do not know anyone who's has one available. Very similarly with there are technically FHA and USDA construction loans, like you can build a whole home with them. But I only know of one lender who has ever offered it, and I have not heard good things. Yolanda, thank you for your comment here. Really quickly, just want to shout out Profitable Business. We need more videos from you. We missed you. Thanks. I was a little slow on videos. I'm trying to get back into it. Also need to stop this snapping thing. Kasun Melinda, Sebastian Layson, thank you for being here. Just about a home. It had 2 old heavy-duty bathtubs and a stainless steel table and heavy wrought iron wheels. We asked for those items to stay, but when they cleaned out, they took them.
Ooh.
I'm trying to see if there's anything in here. That is not great. So the first thing that I would do in this situation is look at your purchase contract, talk with your real estate agent as well. Double check that these things were included in the purchase contract or an addendum to the purchase contract, making sure that those were included. Usually things like bathtubs and what else in there? The table is a little bit tricky because it's not affixed to the property. Usually a bathtub is going to stay. So it's a little strange that I'm trying to think in those situations how that would be handled. It's really going to depend on what your purchase contract says. There's usually going to be some like blanket legal language about things fixed to the property and if they come with the property or not. Things like the table, that needs to be either an addendum to the purchase contract or in the purchase contract to say that that's actually being conveyed to you in the purchase. If you have those things legally in your purchase contract and you have a legal agreement with the seller for those things to be given to you and they aren't there, I would go to your real estate agent, let them know, try to see if there's a very friendly way that you can get those things back. If not, is when you're probably going to need to start looking into talking with a real estate attorney and potentially looking forward that direction to get those items back or the value of those items back. Eternity Chris, I've been following Kyle for a while now, and I'm glad you joined the Dan Frio team. I am as well. I'm guessing this is from your channel as well. Anthony, Tony Chappelle. I said Anthony. Tony's a.
I got that one.
Tony's a loan officer here. He works remotely most of the time. But how can I be as awesome as you two gentlemen? Oh, stop. Tony, I need to have you on, man. It's been a bit. The last time we did a live was like 2 years ago. What can be said? I see your question here. We're going to get to that in a second. Man, we need to run through these. I feel like we always say that and it's still like, how do we do these faster? Travis Martin, what piece of the loan estimate are based on the loan amount, which are fixed regardless to the loan amounts? I'm assuming like what costs.
Title
right?
appraisal, credit report. Yeah. So basically, if you go to page 2 of your loan estimate, the only section that's really kind of usually adjusts some is the top left section. It's section 1A, and that's the origination fees and charges. Other than that, most of the other sections are going to be pretty standard. You're going to have an appraisal, and it doesn't matter the house value or whatever, unless you get over 1 or 2 million, where you might need another appraisal. But that section 2 is going to have basically your appraisal, credit report fees, and those are usually standard. Then you go into your title fees. Those are usually standard. Then you go into your county recording and escrows, and those are usually standard. So most of the stuff really doesn't pertain to the value of the house other than section 1. But unless you're paying points or anything, basically nothing in there really pertains to the loan amount other than the odd interest.
The title policy usually will change based on the loan amount.
Yeah, a little bit.
Yeah, and then the recording fees, it does depend based on the purchase price. Yeah.
But it's nothing to really write home about. It's dollars, not hundreds or thousands. It would be the difference of maybe $100 versus some of the other areas you're going to see where it's going to be like recording fees. I just did a loan in Maryland. The recording fees are like $3,000 just to record the deed.
It's rough when those transfer tax stamps.
Yeah, that's what. Yeah, it's nuts, man.
See, in Ohio, those are all paid by the seller. But it sucks when those have to be paid by the buyer. Miss B, thank you for your question, and your dog is super cute. FHA approves 540 to 580 credit score. Where are the lenders for this situation? Why don't lenders show under FHA, lend FHA approved clients? So FHA actually allows down to a 500 credit score. Anything between 500 and 579, you do 10% down. Anything above anything 580 and above, you do 3.5% down. A lot of lenders don't do these loans because they perceive them as like, there's this weird ego thing that happens with lenders sometimes too, where they're like, I don't want to work with low credit score clients. Like, I don't understand the whole ego thing there. I will say those loans can be difficult. Not always, but usually expectations have to be set correctly. Just because you can qualify with less than a 580 credit score doesn't mean that you're automatically going to get approved. There's still other considerations still has to be written or underwritten through an underwriting software that gives you an approval or a denial. But we do work with lenders who lend all the way down to 500. Again, it's 10% down from 500 to 579. So feel free to reach out to us. We'd love to help you or strategize a way for you to build up your credit score to something closer to 640 is really going to be ideal if you have some time on your side. Kassan, Melinda, thank you for your super chat. You said, hi, I'm confused about how much of my housing expense I can deduct from my taxes. For example, interest and property taxes, $1,000 for a month, and my tax bracket is 25%. Is it tax deductible, $1,000 or $250? I think taxes get a little misinterpreted when it comes to housing because you're not going to write off your housing expenses unless you do itemized taxes. So the way that you can do your taxes, there's kind of two broad categories. You can take a standard deduction or itemized deduction. For most people, they're going to take the standard deduction because there's more of a credit there than from an itemized deduction. So itemized, you're writing off things like, okay, let's say $1,000 a month in taxes or interest. Okay, that'd be $12,000 per year. Maybe you have a couple other things that you can write off that are non-business related because those are not included in your itemized deduction. However, the standard deduction for a married couple is somewhere around $24,000. For a single person, it's around $12,000. So if you're married, I'd rather have a $24,000 deduction than a $12,000 deduction. So in that instance, I wouldn't have to write off any of my taxes or deduct any of my taxes. I could just take the standard deduction and use that to save money on taxes. So beyond that, I would talk with a CPA to get into the weeds of it a little bit more because neither of us are certified to talk about taxes in detail. But most people are going to take the standard deduction and don't have to worry about writing off their interest or writing off their taxes or writing off their, property taxes.
Perfect.
Travis, even though you're coming at us hot again with the Oregon pronunciation, I'm glad you're here and glad you're asking questions. Want to be a pro wrestler? Me too. Welcome. Let's see who else is in here. A quasi. Cool. We'll get to your question here in just a second. Thoughts on the real estate market for 2023? Dan, hit us with a 15-second.
Jeez.
You love these questions.
So here's my expectations, and this is probably going to get me in hot water all over YouTube. So I'm not expecting a crash. Let me first just define what I think a crash is. So a crash to me was like the Great Depression when the stock market dropped 60 to 80%. That's a crash. So I'm saying a crash is 50% or more. Could some areas of the country see that? Probably not. Okay, the reason being is there's not enough need to sell. So what happened back in 2008, people had to sell. Okay, it was shoddy subprime mortgages, teaser interest rates, and so forth. So what happened to most people's mortgages is their payments doubled, in some cases tripled. And in the housing market at that point, the house values were starting to come back down and people were just forced. I mean, thousands and millions of people had adjustable rate mortgages that were triggering and everybody couldn't afford the payments. So it just spiraled out of control. So people were forced to sell. In this economy right now, we're not forced to sell because most people have, an interest rate below 4%, a good standard underwritten loan, and unless we really see the jobs market really take a hit and the jobs report really starting to crumble, where people are massively out of work, I don't see a crash because there's not a need to sell the houses. Now we're going to start having more and more supply, but some supply is coming off the charts too because people are realizing, well, I can't get that $1 million for my $500,000 house that I wanted, so I'm just going to back out and just stay in my house. So that's basically, so I'm expecting the markets to just stabilize. I called this year a 5.5% adjustment in values. I'm thinking next year is probably going to be 0 to 3, but I'm not expecting a national crash. Some areas will be worse than others, but on average, we're going to start seeing some values really stabilizing, possibly being at 0 for a little bit.
Yeah. Can you see my passive aggressive countdown timer?
No, I get it. I was watching it too. You see me stick in? So I'm trying, buddy. I'm trying.
I
I'm
need
sitting
it.
here chomping on my bit.
No,
So,
you're good, man. It's not you. I'm like I'm sitting here and looking at our scroll bar of the questions that we have. And I'm like,
yeah.
shit.
How about if you guys don't mind, we're going to just answer them fairly quick and to the point. And then maybe if you guys want to get in more in depth, Kyle and I both have Calendarlies where you can set up appointments, you can call in, you can email us. But let's just try. We'll try to flow through here and get as many people questioned out.
I think the hard part, and I think this is something that I feel like we'll both learn over time of doing some more lives, is sometimes it feels like, do you feel like rude sometimes giving a short?
Yeah,
like,
I do.
You're like,
I
here's
really
the
do.
answer. And
a lot of times we don't need to elaborate. Just give them the answer.
I know it like feels rude, but then also in the mortgage world, like there's so many circumstances and like, well, this could happen, so like we'll go through these quick and try to push through the weirdness of it. Okay. And then if you need further follow-up, please reach out to us. And that's what we're here for, is to give you those.
We're happy to answer anything.
REI Stoners, what's the lowest we can put down on a duplex using conventional loan? If we want the MIP to fall off, 20% for the technically PMI. For the mortgage insurance fall off if I have over 740 credit, but my wife is at 700. 20% is what you will need there. For credit card payments, do you enter 0% if you fully pay off your credit card every month? If not, it seems like it hurts to use credit cards.
So the best suggestion there is, hate to say it, what happens when they send out your statement to you, they actually send that data to the credit bureau agency. So most people don't pay off their credit cards until they get the statement. So if you know that your statement's going to come out on, the 10th of the month and you're going to receive it on the 12th and have it paid by the 20th, start paying it maybe 2 weeks early. And you can just go online, look at your balance or whatever paid off. Then at that point, your credit report will actually read a 0 balance and it'll be 0. So what can happen though, is if you, like I had actually one today, the young lady actually emailed me her Discover statement because she had $500 charged on her Discover bill. Well, that's what the credit report showed, but she's saying it was paid off. So all I had to do is go onto her account, print me out a statement showing the current balance as of today is 0. I'll get that in, get it to the underwriter, and we can even do that at the bureau level. We can send it to the credit bureaus and have that updated for you, and that could maybe even increase your credit scores as well. That was pretty fast and efficient, wasn't it?
I like it. Travis, do you have a break-even calculator for refinancing? Yes, email me. It's mainly for purchases, but you can use it for refinancing. I don't understand why a lender would refinance if they lose money in the long run. Lenders don't make money off your loans long term. It's all about loans, like trade hands very quickly. And the way that a loan works this is why Fannie Mae and Freddie Mac exist, is let's say you have a $400,000 loan. I'm going to make up numbers. Don't act like these apply. This is just for the sake of the example. $400,000 loan. They give you the money. Well, that lender doesn't have $400,000 anymore to give to somebody else. So what they do is they take your loan, they wrap it in a nice package. That's the whole reason why underwriting exists, is because then they can go to someone like Fannie Mae who buys mortgages. And Fannie Mae is going to say, we'll buy it as long as it meets these certain requirements, like it has a certain credit score and a down payment. And then Fannie Mae says, that looks really nice. We'll give you $410,000 for that. So the lender now made a profit of, again, this is a fake example, the lender got $10,000 from that deal. It's usually much higher. But then that lender now has the $400,000 back and $10,000 in profit. They can now lend to somebody else. Fannie Mae takes those loans, they package up with a bunch of other loans, they sell them as mortgage-backed securities, which are bonds, which go into a lot of people's retirement accounts. And then those get traded over and over and over by different institutional investors. So it's all about the flow of this money. It's not that somebody's holding onto your loan for a long period of time and making money off of it.
Dang, you're right on point, buddy.
I do some research. Make him say God. Do you think the Keystone Home Loan Program is a good idea for 10-year having to be in the house, down payment assistance, not being able to sell or refinance? I'm not familiar with the Keystone Home Loan Program. Are you? Is that in a certain state?
It's probably a Keystone loan program, good for 10 years. So it's a down payment assistance program. That's one of those areas what we're working on right now, Kyle and myself. We're
Pennsylvania.
working on a platform to come out. There are tons of down payment assistance programs, but you just mentioned one of them that's I wouldn't take because there's other ones out there. So there's hundreds of down payment assistance programs. So give us about a week or two to come up with an event. So we'll do a live event to go over these with you guys. This is even going to be important for realtors out there and maybe other loan officers. You're going to learn. We'll do all the scrubbing for you. We're going to actually present you with 2 or 3 options of the hundreds out there that really make sense. The ones we're going to go over, basically it's free money. You get the money, you walk out of the closing, and you're done with it. You don't have a 10-year repay payment period, or you can't sell the house or anything, because there is a lot of strings attached to a lot of these. So
Not being able to sell is
I don't know how they can do that. I mean,
like Drew just mentioned, like it just means if you sell, you have to pay back the money. It doesn't mean you cannot sell.
Yep. You have to pay it back.
The hard part is a lot of people don't have the position to be able to sell and have to pay money to sell. Tiger Bites, please explain the difference between Fed rate and the mortgage rate. So they are not the same thing, and they aren't really based on each other, but they loosely follow each other. So the Fed rate is what is the set rate that banks charge to each other to borrow money. And usually this is like an overnight rate. So one bank might borrow money from another bank or from like a federal bank, and it's at the Fed funds rate. Usually this is very low, and this is how the Federal Reserve stimulates the economy, is by either reducing that rate to stimulate the economy or increasing that rate to slow the economy down. The mortgage rate is not directly tied, but they do trend in the same way because mortgage rates often are a reflection of how the economy is doing. And then also the Fed rate does control inflation, which inflation has a huge play in mortgage rates. Mortgage rates are usually going to be based off of a certain mortgage-backed security. Like I mentioned earlier, since those mortgages are traded kind of over and over and over again, I can go into like really deep into it, but basically the more people that buy mortgage bonds, like the Federal Reserve, for instance, that's going to increase the price of those bonds, which will lower the yield of them, which effectively is the interest rate that you get. So it really is this whole complicated mix of how rates and purchasing and demand and supply affect rates here, but they're not connected, but they do loosely follow each other.
Tiger Bites, I would highly suggest if you're probably coming from Kyle's channel, how I know is because I talk about the economics and the Federal Reserve and the MBS market and everything every day. So check out my channel if you would, because that's right in the wheelhouse of what I do a report on every morning. I usually have it posted by about 10 a.m.
Yeah, just search Dan Frio and it'll come up. Susanna, we answered that question. Joey, really quick, I want to shout out some Emmanuel, DJ, Jim Sounds, Snarky Guy, Free Your Mindset. Welcome here. We're going to answer questions here in just a minute. Hang tight. And also, we've got 151 people here. Thank you for being here. I know I usually say this always at the end of the live streams, but I think it's cool that you're here, not just because like it's nice to have people actually show up to live streams, but it's a Tuesday night. I'm sure you have like other things that are more interesting that you could be doing, but I'm imagining that you watching this video, you're probably in the spot where people are relying on you to figure out how in the world to buy a house. Maybe, your family wants you want to move somewhere else, or you have to relocate for some reason, or there's a job change, and someone is looking to you, or multiple people are looking to you to say, how are we going to do this? And you're taking the time out of your day and the effort to put in to learn how to do it in the best way possible. And a lot of you are asking questions. So give yourself a nice little pat on the back for that, because that's a really cool position to be in. Because a lot of people just kind of float through things and hope for the best. But you really are setting up your family and the people in your life that you care about for success by digging into understanding more about how to buy a home to make sure you do it the right way and with the least amount of stress possible. How are ARMs looking right now? I've heard pricing for ARMs might be more competitive than fixed rate mortgages, maybe a good option for investors if rates are coming down.
I just can't find the disconnect, because there are some like credit unions and companies out there that are killing it on the ARM products. But for some reason, mainstream isn't picking up the ARMs. I think they just realize right now that they don't have the appetite for lending right now, especially in the housing market. That's why I think there's just a disconnect. The demand, there's not a huge amount of demand. There hasn't been any demand for adjustable rate mortgages for 10 years. So now all of a sudden it piques its interest. So now the banks really don't know, they have to rework their whole back offices and all their profit margins and everything else. We see it on a daily basis because I always expect, well, if there's at least a 1% spread between the rates, let's say one is 7 and one is 6, that's the only time I would really be interested in an adjustable rate mortgage for the long term on people getting just a regular loan. There are other products that I would highly suggest people getting adjustable rate mortgages on, but not for your primary house mortgage, so forth. So
yeah. How do I use my investment stock account for mortgage application? Well, the assumption is that I will sell my portfolio to cover the down payment. Yes, if you are going to use your stock account for your down payment, first, they do want to see that you have, those stocks have been in there for at least 2 months. You can't use a stock, like a brokerage account, to like launder money from a different source, which people do try to do. So as long as it's been in there for over 2 months, you're great to use that. You will have to liquidate. I almost said liquefy. Oh God. Liquidate those funds to be able to purchase. Now, when it comes to documenting that, man, I'm trying to remember. I believe if you have, is it over 120% of what you need in your account that you don't have to show proof of liquidation?
I've always had, always got the proof. You know, there's a lot there. I take that back. There are some situations where we didn't have it. We just had to show it in the account, and we didn't actually have to liquidate it.
Fannie Mae stock liquidation. Yeah, I'm trying to remember the percentage. Find it here real quick. Yes. Oh my God, I was right. It's 120%. So when used for the down payment or closing costs, if the value of assets is at least 20% more than the amount of funds needed for down payment and closing costs, no documentation of the receipt of liquidation is required. And Drew just came into 120, no liquidation needed.
Got it.
This is the only benefit of me reading through mortgage guidelines in my free time is these.
I used to do that. That's all I did.
These dumb little facts. Matthias, thank you for your question. How does an assumable mortgage work? And is there a way to finance the difference between the purchase price and what's left on the mortgage if you don't have the full amount down to cover the difference? Are you more familiar with assumable mortgages?
I'm not, to be honest with you. I've never, because people don't reach out to us if they're looking to assume the mortgage. I really don't know anything about assumable mortgages. I know all of FHA loans are assumable, but I have no idea how it works.
Yeah, I am a little familiar, but I usually kind of have stopped researching because it's one of those things where it sounds great and it's a great option, especially as rates are higher. But I am not finding instances where people are actually being able to assume a mortgage. Either there's something with that mortgage company not allowing that to happen, or there's all these different scenarios that I'm finding where people, like, it sounds great, like a lot of mortgage programs that kind of exist, these like specialty things. But then in practice, I'm not seeing a lot of people being able to have success with moving forward with them. So absolutely, please keep looking into it more. And I'll do some research on my own as well. But I'm just not seeing people have a lot of success with getting that finalized. Ozzy, hey, good evening. Will they check on the bank statements that you're pulling out the down payment from or all of your banks? No, you only have to show the bank statements that you're using for your down payment and closing costs. So if you have 5 bank accounts and you have $50,000 in bank account 1 and you only need $30,000 to close, you only have to show bank account 1. You don't have to show the other bank accounts. The only instance in here that you want to be careful of is if bank account 2 and bank account 3 deposit money into bank account 1, the lender is going to need to see those statements as well. And the reason why they want to do that is they want to check for you're not laundering funds through different bank accounts to try to hide that coming into one other account. So keep that in mind. But you don't have to show everything. I think sometimes people forget that, like, in the mortgage process, you're not the lender doesn't have to see all of your life. We only need to show as much of your life to qualify.
And the more you show, the more cans of worms that can be opened.
Yes.
That's the tough thing about that part of it, because then you start. But you were dead right. I'm impressed, buddy. You had all the bank statements, the 3 bank statements, everything. I always tell people, just send me what I need, and then we'll kind of backtrack it. But if you guys can just think of 2 words when you're thinking of cash or down payment: source and season. Sourcing means where'd the money come from. Okay, where'd it come from? And seasoning means you have to show it somewhere for 60 days. So if you need to source and season the money. So if it's not coming from your account, it's a gift of money from mom and dad, we're going to have to get mom and dad's bank account. And sometimes they're a little bit refrained from doing that.
Yes. I'm gonna start doing this thing where I'm gonna write assumable mortgages down. When I don't know an answer on a question, I am going to answer in the upcoming live.
Perfect. There was a super chat on here from the guy RY, and I don't know if you did that when I was up getting my plug. In your experience, do duplexes or triplexes sell easier and often?
Oh, I missed that. Oh my gosh.
Sorry, it was a super chat down there. I think that was back a while ago. So I'm not trying to have him jump, but I'm kind of having him jump. So it's way down there. So just on the reflection of the single family homes versus duplex and triplexes right now, they are in huge demand. So even builders are still concessively and just loading up on multifamily buildings and really pulling back on single family properties. So there's a glut there, and there's going to be more and more. But people are really into that right now, especially with the cost of housing. So if you buy a 2-unit or a 3-unit or something like that, you're sharing kind of using that other rental income to offset your payments. Great idea to do that.
Yep.
So yes,
Joey,
they're going to continue to be in demand.
Snarky guy, Gabriel, Joey, thanks for being here. We're going to answer your questions here in just a bit. Harry's 2014. Do I need to ask lenders if they offer a 2-1 buy down? Yeah, it's probably best. I think most lenders are going to offer it, but it's definitely worth asking before going through the whole process. Or can I just ask my realtor to put that in the purchase offer? Please, 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 please talk to your loan officer about this before you move forward with it, because you do want to see a quote, take a look at all your numbers and see what they look like. Don't just surprise your lender with, hey, this is what we're doing, and they're like, oh, I had no clue what you were talking about here. And with some lenders, correct me if I'm wrong, Dan, that the buy down can affect pricing.
Yes, it can affect pricing a little bit, not that much. When we mean pricing, it's kind of a back end verbiage that we use. Your rate, would your rate be higher? Usually it's basically the same, because all they're doing really is just accumulating the interest, setting it aside in an escrow account, and then having somebody pay that. And that's why it's usually beneficial for the builder or somebody else to pay it.
Travis, you asked, I just recently sold my stocks a couple thousand. Is that a red flag for a lender? Definitely not a red flag. You will be fine if you go through what we just talked about, the kind of that full scenario there with stocks. David, what's a normal amount of income for a loan officer to be making while working at Rocket Mortgage or a bank like that in their first few years? Do you want to answer that? I don't know about Rocket.
You know what? I know we used to know a lot of people at Rocket, UWM, or United Wholesale Mortgage. They don't make a lot, and they have. I mean, it's a hard job. You're on the phone all day, every day. It doesn't pay a lot. You don't get a lot of perks, but it's great training ground. It truly is, because they have you on the phone. They're talking. It's exposure to talking with clients, learning the systems and everything. So I look at it as just like boot camp or an internship. Work there for a couple of years, get to know the business, and then they know you're going to move on or up into management. But it's a great way to cut your teeth in this business.
Yeah. Make them say God said. The short answer would have been fine. I would still like the answer, hopefully. So we have some confirmation. We can do the shorter answers here. Champagne Poppy, I'm looking to buy a fourplex. How do I get the FHA loan to add the rental income so I qualify for the purchase? They should be doing that automatically. They're just going to use a Form 1007 appraisal, which again is going to happen automatically with any competent lender to use that rental income to help you qualify if you need it. If you don't need it, then it's easier to just not have to worry about including that in your when they're doing all the documentation. Is the meet with an LO option no obligation. Yes. So when you schedule a call with anyone on our team, there's zero obligation. It's entirely free. You're not locked in. You can work with any lender that you want. You can choose any lender that you want up until you sign paperwork at closing. There is no obligation that you have to any lender, obviously until the loan closes, and then you do have that loan. Let's see. VA doesn't count the rental of other units as income. Sort of hard to use the VA home loan for a duplex or triplex. Does it? I'm pretty sure.
Why? I
Yeah,
do
it
you know
does.
the reason why you're saying they wouldn't use rental? Why wouldn't they use rental income?
I'm looking at this right now. It uses the prospective rental income to offset the
Yeah.
mortgage payment.
Yeah.
Yeah, and
So
I think the
what-
clarification here is it's not used as income per se. Like it's not added to your income line. It only can take, let's say, a $3,000 mortgage payment and reduce it, which effectively is functioning as income. It just doesn't actually apply on the income side of your loan. It's only reducing your future mortgage payment. Whereas a conventional loan will treat it as income. And in those instances, let's say you get Schedule E rental income for the past 2 years on a rental property, and that rental income exceeds your mortgage payment, then you can treat that rental income as true income, and the excess, the profit that you're making monthly or the cash flow you're making monthly on that rental can be used as income. Whereas on a VA loan, you can still use it to offset the mortgage payment, which again is effectively functioning as income. But from a technical perspective, I guess, no. Mortgage guidelines, way too detailed and confusing. Elvina M, my lease ends next July. Would it be a good idea to get pre-qualified now to see what I qualify for? Would that hurt my credit when I have to wait till next year to get a home? I feel like it may be a little bit early in the process to do that. It wouldn't be bad to talk with a loan officer and just get a general idea of where you're at. I wouldn't have your credit pulled. There's really no point in doing that. What you can do is have a soft credit pull from a loan officer, and it will not impact your credit score, but it will help them take a look at where is your credit score at. That way we can see, is there anything that needs to be worked on, or are you in a good position to keep moving forward? Drew Coleman said it's better to offset the payment with rents received than to add it as positive income. Yeah, and Drew, can you remind me, you're a conventional underwriter, right? Or do you also do government? I would love to know. I really want to get some underwriters on here.
There's that one girl, there's what's her name? We should have asked her to come on with us. She's always on here with us, and she emailed us as well. She's a conventional underwriter. She actually sent me a LinkedIn connection. I accepted it today. Shoot, I forget her name. I'm losing trend, though. Sorry about that.
Drew said I'd do it all. Jose, you and Dan are awesome. I'm a first-time home buyer. Is there any programs that can help me with a down payment and a mortgage loan? My scores are in the 600s. The hard part with where your credit score is at is any specialty down payment assistance programs usually tend to require above a 680. It kind of ranges. There's some that do 620, some that do 640, some that do 680. However, if you're looking at something like a USDA loan, you can do 0% down. If you're a veteran, you can do 0% down. And then on conventional loans, the down payment's as low as 3% for a first-time buyer. And with FHA loans, it's as low as 3.5%. So if those are all fine, then I would go with a standard loan as opposed to a down payment assistance program, which usually can have some extra, some strings attached to it, either in a higher interest rate, or you have to pay back a portion of that money. And like Dan mentioned a little bit earlier, we're going to work on putting together a whole list of down payment assistance programs. I'm going to put them in a nice little easy to read chart and show you what all the requirements are for all of them. Drew, I never returned your email. No, are you serious? If I didn't, I'm so sorry. Let me look. Drew. You're so right. Oh my gosh, I'm so sorry. Okay.
It wasn't in junk folder, spam.
Nope. I'm so sorry.
You
Drew,
just
I will reply to your email. Okay. I think why I didn't reply, I don't know. That's my bad. Thank you. I have it set in my set aside list. I'll reply to it. Champagne Poppy, I try to. Oh, wait. We did this one. The Muse, thank you. Thank you for being here. Gil, hello. I'm getting ready to purchase my lots of rental income questions today.
sure.
I'm getting ready to purchase a second property. What's the best way to provide proof of rental income, tax returns, or lease agreement? If it's for the you want rental income from the property you're purchasing, they're going to do an appraisal on it that's going to collect market rent. That's usually going to be the best, unless there's already an executed lease agreement on the property. Then you could use that. If it's for properties you already own, then they're going to either use executed lease agreements or Schedule E on your taxes. Schedule E, right?
Yeah. So just to make sure though, if you've had the property for a period where you should have filed taxes on that property for rental income and it's not there, you're going to have a tough time using income. So let's say you bought it June of this year, where obviously you haven't done your tax returns yet. We will use a lease. But if you bought it last year or the year before or something like that, and you don't have it on your taxes, it's really hard to figure that out unless that's the subject property. If it's the subject property, then it will come in when we do the appraisal will tell us how much rent the property's getting. But if it's another property that you own and you're not filing the rentals on your taxes for some reason, you're not going to be able to use it. So make sure you get it on your taxes, in the tax season's right around the corner.
Bob, I seem to remember something about some sort of lender fee reduction that goes into effect on December 1st. If it's true, can you talk about it a bit and if it automatically applies to everyone? Yes, I do have my most recent video is actually about this. Don't leave now to go watch it. Watch it later. So long story short is it will go into effect automatically nationally with every single lender. No lender has this as their own special little program that they have access to. Basically, what's happening is the way that Fannie Mae and Freddie Mac, the organizations that make the rules for most conventional loans, is they used to charge a fee to people who had lower down payments and lower credit scores. And that fee got passed along to homebuyers, not as an upfront cost, but as an increase in their interest rate. So someone with a low credit score and a low down payment would have a higher interest rate than somebody with a high down payment and a high credit score. These are what they call loan level price adjustments. Doesn't really matter that much with the name of it and stuff, but what they're doing is they're removing that. So it used to be based on the risk of the loan. With your lower credit score was a higher risk, lower down payment was a higher risk, and you got charged a higher interest rate. On December 1st, they're slashing that. I saw a lot of people on that video saying like, this is dumb that, people with I spend all this time making a good credit score and now everyone gets the same thing as I do, which is a very strange way to look at the world. Like everyone has to be doing worse for me to feel good.
But it only applies though to the Home Ready, right? Home Ready and Home Possible.
So here's the interesting thing about it is that it applies to Home Ready, and Home Possible, which is a type of conventional loan that you can get with 3% down. You do not have to be a first-time home buyer, but you do need to make less than 80% of the area median income. If you watch the video, I show you how to use the map that shows you what you need to qualify, or what you need to make below to qualify for the Home Ready program. So it works for Home Ready and Home Possible. Those are pretty cool loans because they already give you a lower interest rate and lower mortgage insurance than a standard conventional. You also can use a regular conventional loan and this allows you to do 3% down, if you're a first-time home buyer, meaning you haven't owned a home in the past 3 years, and you need to make less than 100% of the area median income. If you're in a high-cost area, somewhere like Nashville or Sacramento or Miami, then it's 120% of the area median income, which I feel like in those markets, most people aren't going to be able to meet. But in standard markets, it should be pretty helpful for a lot of people. And on the very high end, some people will see a reduction in interest rate by 1.75%. Most people are probably going to see a reduction somewhere around probably like 0.25% in your interest rate. So if you were at a 6.5, it's probably going to be 6.25. You're not going to see a crazy big deal, but it is big for quite a few people.
Perfect.
Some of these questions we already answered. Let's see. I'm new to real estate altogether, but a question I have is, are homeowners associations everywhere for every neighborhood or no? No, they are not everywhere. But you can check that before you can check it online. Sites like Zillow and Redfin and Realtor.com will show you if there's an HOA. Sebastian, I'm currently renting and want to keep my current lease under my name so my family can live in there since rent is cheap. Will this complicate things when applying for a mortgage? No.
We don't check.
Yeah.
We just ask you basically. So what will happen is if your credit's good enough, we don't even care about your current housing. So it probably won't even come into play. You just have to answer on the application. Do you own? Do you rent? Do you live free? So that's the only spot that it's going to be. But we don't really care if you're on the lease, you're not on the lease, or anything else. So don't worry about that part.
Yeah. What can be said really quickly? Amber, welcome. I see your question here. We'll get to that here in just a second. What can be said when going through a divorce? Would it be a knock against me in a home buying process? And would that complicate working with lenders and realtors?
Here, when going through a divorce, so if you're currently going through a divorce right now, that it really doesn't matter. Let me just give you some experience that I had on just get some advice that I could give you. In the divorce, if you have a current house and you're not taking the house, please make sure to either have your ex refinance the thing, hand you a quick claim deed to remove you from that house. But what you got to understand too is you're still liable for that mortgage. Is the only thing. But no, just generically, if you're in the process of a divorce, the divorce has to be finalized, because the problem is in some states, because if you're married, your spouse could possibly have homestead rights. But just we'd love to work with you. We're a federally chartered mortgage advisor. We're actually a bank, but we broker out most of the loans. So we'd love to talk to you about that specific scenario. Just because it's a little confusing, and I want to know exactly what spot of the divorce you're in. Because if you're basically weeks away from signing the final decree, that's perfect. But if you just started, it might take a while, and then we might get you pre-approved. You might find a house, but you might not be able to close on it until you're actually divorced.
Yes, and I really quickly want to show you. So if you are in that spot, because I know we probably don't plug stuff as much as we should. If you are looking to buy a house, you can go to winthehouseyoulove.com. And what you can do is click this button, get a free quote. And is this showing on the screen? Why is this?
Yep.
Oh, it's back here on the software doing weird stuff. So you can get a free, no obligation mortgage quote. You can just select where you're buying. Excuse me. You can start an application if you'd like to, and then we'll reach out to you and show you your options. You can schedule a call if you're not ready for the application. You can always email me here if you'd like to. And I do have some tools in here. One is if you already have a mortgage quote, you have a loan estimate from another lender, you don't have to go through the whole process. We're not going to chase you down. You don't have to do an application. All you have to do is just tell us a couple quick questions, upload your quote, and then we'll reply to you in about 24 hours and let you know if we can beat it. If we can't, we're going to tell you got a better option. If we can beat it, we want to give you a lower rate. Another one that's really popular is the 2-1 buy down. A lot of people are talking about this recently. If you want to see the math, all you have to do is enter your purchase price, down payment, and interest rate, and it's going to show you everything in here, help you see how much money you need to negotiate from the seller or a builder, and then also how a refund works with this program as well, if you sell or refinance within that 2-year period. So feel free to go check that out. Let's hop back into some questions here. Find love on the new dating site. Oh, we'll block that.
I don't miss those.
Man, it's so interesting. The bots that I don't get. What's the goal? What's the goal with the really sexual bots? What are they benefiting? Brandon, if your loan is FHA, Can you refinance whenever you want, or is there a time period you have to wait before you can refinance? 6 months for a rate and term refinance, and cash out.
I think it's 12 months.
That's
It
what I was
was
thinking.
last I read, it was 12 months before you can cash out.
A quasi. I read the conforming limit is going up to 715 next year. Can you confirm that? That's what's being estimated. Conventional loan limit should come out soon.
It's already pushed out in most lenders.
But
Most
the official 2023, I don't think it's out
I don't
yet.
know if it's officially, but everybody launched about 30 days ago a 700 figure, and that's what everybody's been using so far.
Oh no, it actually came out today.
Is it 700?
715.
Really? Everybody was using 700.
Yeah, it was like 715, and then they had pulled back to 700, and then I think because they were afraid of what do they use? They use the HPI data, I think. Wait, is it? I'm actually no, it's not out yet. I'm looking on FHFA's site, and let's see. Here's 2022, obviously. 2023 is not available yet. And you can see like they do them, November 30th. That's 26th, 24th, 27th. We should be seeing it here in the next week, at least before the end of the month. They always tend to do it right here at the end of November. But once those are out, I'll definitely post something. Yeah, for a second I was like, oh my gosh, how did I not know about this? But yeah, they're not out yet. But yeah, a lot of lenders are, like Dan was mentioning, they're anticipating what the loan limit will be. So a lot of lenders are using 715 and are basically holding it on their books until they can sell it to Fannie Mae, Freddie Mac.
It's going to be at least 700 because that's what's published. Yeah.
Drew said, I believe FHA is 6 months before refi, as I recently turned down the option to refi my home after 6 months due to rates, but it could change the last few months. Yeah, I'm familiar with the 6 month wait for rate and term. Salman, Reddit struck subculture king, Oregon. Oh wait, are you saying you're buying an Oregon, or are you making fun of the Oregon thing?
Oregon.
Pat Mantle, we're gonna get to your questions here in just a little bit. Thank you for being here. Almost pushing 2 hours at this point, which seems to be the trend. How does the $25K grant from Biden work? I do have a video on it. You can search that. It's still a bill. Nothing's passed yet. I break it down in a meaningful way. I have slides and everything. Just search "Win the House You Love" Biden grant, and you'll see that video. At least I think it's broken down pretty well. How do you get a condo approved for an FHA loan? Does the whole condo association need to get approved, or can a single condo unit be approved? Usually, it's the easiest route is to get the whole condo association. Whole condo association needs to be approved, and you can search FHA condo approval, and there will be a list of approved condos. There is an FHA spot approval for single condos. It's a real bear of a process. Have you ever done one?
No, we tried like 3 or 4 in the last 6 months, and it's brutal.
If they're not already FHA approved, there's a good chance there's a reason.
Yeah.
I'll leave it at that.
Usually, a lot of times it's reserves, or there's a lawsuit, or they just didn't take the time, or a lot of homeowners associations didn't take the time, or didn't have the money when it came to renewal back years ago, so they just stopped renewing, and they just like, screw it, we're just going to stop renewing.
Truly blessed 1978 James W. Thanks for being here. Free your mindset. What's something first-time homebuyers often overlook that's important? What comes to mind for you?
What sometimes first time is what I did wrong was I put all my money down when I told you that story. I put all my money down when my wife and I bought our house. Here's the biggest thing I can kind of fill in on this one. What happens a lot of times is people wait till the last minute, and then they start realizing, you can't really. The biggest things we look at when you're trying to buy your house is your credit, your income, and your down payment. Okay, so that you can't really work on your income. I mean, you got a job and you're doing everything you can there. Where I would give you some advice is pull your credit and make sure it's a soft credit pull, but it's your real credit. It's not like Credit Karma or something like that. It's a true credit report, and look at it, because 90% of the credit reports have errors. That's the number one thing I could ask. If I was to buy my first house again, I would pull my credit and look and see what the heck it is, because there's probably stuff on there that you don't know about. And then try your best to set a little bit more money aside, because you can never have enough money on the sidelines, because when you do buy that first house, you're going to need stuff. You're going to want towels and light bulbs and this, and it adds up.
Yeah.
So those, if I could have two things: review my credit and try to put a little bit more money to the sidelines.
DJ Jim Sounds, have lenders relaxed terms for travel nurses? I wouldn't say necessarily relaxed, but it's more they clarified what was unclear. So it's more that underwriters were on the very safe side. And the guidelines have become a little bit more clear. So you said, I'm relocating to Georgia from New York and wondering if I will need to rent first to establish employment in the state. From the guidelines that I've seen released from Fannie Mae, you still need a 2-year history of nursing. However, travel nursing, you need a 1-year history of being a travel nurse. If I'm remembering that correctly, I don't think you need 2 years history of being a travel nurse, but at least so the way to summarize this is, if let's say you're a new nurse, you've never been in nursing before, and you start by travel nursing, you will need 2 years of travel nursing. If you already have been a nurse for a year and then you started travel nursing, you need at least a year history of being a travel nurse. If that's the instance, or if that's the case, you don't have to rent in the new place that you're going to, because you have history of being a travel nurse and going to new places and having work. They will want to see your new contract for where you're going to be moving, though, and making sure that's at a consistent income with what you've been receiving in the past 2 years. I did see a lot of people, especially when COVID, when it was in its height, that were like, they'd make $10,000, $20,000 a month nursing when they were making, maybe, I don't know, 8,000 or whatever. Of course, nursing is like all over the place in income, but they'd make this huge spike in income and then try to go qualify for a mortgage with that like 20,000, a month. And it's just not one, that's not smart, because COVID obviously like died down, and the demand for nursing died down. But also lenders can't just use your new income or that higher income to help you qualify. They want to look at a long-term history of your income. Emmanuel, can I ask the lender to reduce my interest rate after being locked in if rates fall below what my locked in rate was? You want to take that?
You can try, but they don't have to, because think of like locking in your rate as like buying a stock. Okay, you watch it, then you bought it. So now you own it. So the next day, if the stock price goes down, you can't trade it back in. That's what should and normally happens with most situations. But the good news is we're a broker. We're with a bank, but we broker out almost all the loans that we have. So we have a stable of 84 different lenders, banks, mortgage companies, and lenders to choose from. So what we do, we have the option. We'll lock you in over here, but we have all your information. We have your documents. We have the whole everything. So we'll go back to that lender we locked you in and try to renegotiate. But if they won't renegotiate with us, I'll just withdraw your loan application and move it over here. That's one of the reasons why we started the free loan estimate reviews that we posted, and we put it on. Kyle has a big thing on that on his websites. He has videos on that as well as I do. So Kyle, can you just show them where to go to? If you guys do have a mortgage quote out there,
yes,
or your rate locked in, Kyle will show you where to go to just click in there and download, just basically upload it into our system. Give us a day to review it. Let us know how you want responded back, and then we'll do an analysis of it and get back with you, usually within 24 hours, to let you know what we can do. What's happening in most cases, we're saving you money on your fees and your rate.
Yeah, and you can just go to winthehouseyoulove.com/compare, or you can go under here to tools and compare your quote. Both those options work, and that's not the screen I wanted to go to.
Perfect.
Snarky guy, Is it better to pay off your credit card balance less than $5,000 prior to applying for a mortgage, or have that money available as a down payment? You have a 697 FICO. In this instance, I think it would be best to don't do anything yet. Talk to a lender and have them run a credit score simulator to simulate paying off that credit card balance. And then help you look at a quote as well. Because first, I would want you to look at a quote and see how much money you need to bring to closing with your down payment and closing costs. And do you actually need that money for the credit card right now? If you don't need that $5,000 or less than $5,000, I would say don't touch anything with your credit until after you close. If you do need that $5,000, then I would want to run the simulator to see if we pay it down, how would it change your credit score? Because if you can get 23 points from that, which would probably be a little generous, if it's only $5,000, then that'd be really great. However, if it's going to not do anything to your score, if it's going to keep your score stable or only increases it maybe like 3 points or something, it's not worth it to get the benefit of paying off the credit card balance. I'd rather have the cash. Yeah, I think I answered that all the way. Gabriel, I have a low interest rate. Oh, and just side note, Dan, if you need to head out at any time, just
Oh, no
let
worries.
me know. I have a low interest rate, 299, built new home in 2021. Been hounded to sell by realtors. House was built for 450, now estimated to be 820.
Jeez.
Wow.
God bless.
What should I consider with rates so high? I would not
What
be
do you
worrying
do?
about rates if I
Where-
was going to make
Where are you going to move?
$400,000.
If that house is way too big, maybe you sell it, downsize, pay cash for a house, and you're done. You think not having a mortgage payment for the rest of your life, that'd be kind of awesome. But where would you live? Where would you go to? I mean, if there's a game plan there, then yeah. But if there's no game plan, then now you got to take that money, you got to buy another property. You're going to get to the higher rates and everything. That's why a lot of people aren't selling right now. And that's why I said it previously in the video. A lot of people don't have to sell. And that's why we're not going to see a crash throughout the whole country.
Yeah.
But, where else would you move to? Or where else would you live?
Yes. Daniel's son said, "Hey, Kyle and Dan, I'm new to the channel. We're going to answer your questions here in just a second, but welcome. I'm glad you're here."
Hey, welcome, yes.
Justin, I just locked in a 5.75% interest rate on my VA loan. I'll be paying $1,800 to drop down from a 6.5 rate. That's cheaper than most of 1% origination fees, which my lender doesn't require. The 1% origination fee does not apply to discount points on a loan estimate, just as a heads up. And if you'd like, there's that compare your quote option. We'd love to take a look and see if we can offer a lower rate on that VA loan for you. You can just go to winthehouseyoulove.com/compare. It's also on my website. So we'd love to take a look. You can send us that loan estimate. We're not going to hassle you through an application or all that stuff. We're just going to look at it, show you within 24 hours. Can we beat it or can't we? And then you get a really quick answer there. So feel free to do that if you'd like. What is needed to use rental income? Man, the rental income is just really hitting off today.
Seriously. So we should have an investment, like an investment property. Seriously, an investment property live event, so people can ask, how do you buy? How do you treat this? So forth. Cool.
What is needed to use rental income from a departing resident's primary home? Usually a lease agreement. I've seen underwriters require different things when it comes to also a deposit. I believe from a departing residence, they usually they want the lease agreement, an executed lease agreement plus a deposit. Correct me if I'm wrong on that, because usually in those scenarios, it's kind of a little iffy for the underwriter, or they'll request a 1007 appraisal, which shows comparable market rents on your home. Are you familiar with the security deposit?
Yeah, it depends a lot of times on the underwriter. Drew might be able to answer that one. I've had approvals come through where you just need a copy of a lease. Others ones need a lease and a copy of the security deposit. But there used to be guidelines, and I think they've depleted from now years ago, where you had to have like 20 or 30% equity in your home. You had to actually get it appraised before you could actually rent out your house to buy another house. And I'm pretty sure those are all gone. It's just basically you either need a lease or a lease with a security deposit.
Yeah, I'm trying to look through the guidelines real quick. I don't know if I can get a quick answer on that. Rental income from departure residence. I'll look it up later. Drew said cannot use a 1007 from non-subject property. So in that instance, it'd be a lease agreement. Signed lease for rental departure. Cool. I'm gonna write that down. What's the proof for self-employed business? 1 or 2 years. It does depend on how long you've been in business. Most of the time, it's going to be 2 years. There's a very small instance in which you can get away with just 1 year of tax returns, but that's if you have increasing income and you've been self-employed for more than 5 years. And also the underwriting software has to say will allow it. So most of the time, 2 is what you're going to expect.
A trick for anybody out there: if you use Freddie Mac, I think Drew can respond to this. I think it's Freddie Mac. If you've been in business 5 years or more, it almost always tells you you only need 1 year of taxes.
It's always helpful to have that dual AUS run.
Seriously.
Amber said, OMG, what have I missed? I don't know. Is there something that you were referencing other than the past 2 hours of us answering questions?
I'm messing with my light. That's why I'm screwing around here. I'm trying to get where I'm not so glowy.
Are buyers able to go through underwriting before going under contract in order to close faster? Yes, you can.
I would highly suggest that. If you know you're going to buy in January, let's work on you now.
If you've been saving up for a down payment upper 5 figures and decided to not pursue homeownership for another year or 2, what would you do with the cash in the meantime? What would be your suggestion there?
I'm not a financial planner. I'm not an analyst. You got to really, really disclose all the stuff there. I was talking to my son today, who's huge into crypto, and he made tons of money on it. Yes, he got out and made prudent decisions with that. And I text him today what he's doing with his cryptocurrencies and stocks. And he's not adding to any stock positions right now. He's adding a little bit to some crypto here and there. That is hugely speculative. You got to remember my son's 30 years old and he does financially pretty well, so he has the disposable income there. But I'm sitting on the sidelines with my cash right now, just waiting for a little bit more comfort level with the markets and what the Federal Reserve is going to do, because when the Federal Reserve raised rates, valuations in stocks and everything drop. So that's why you're seeing the stock market drop. So I think there's 1 or 2 more rate pops coming. And then from there, I'll probably be looking to add positions next year.
Yeah, I would just personally keep it in a high yield savings account. Right now, you should be expecting somewhere, I think my savings account's 3% right now. So I would just keep it there, especially if you're in a year. You might change your mind. It might be 10 months, it might be 8 months. I certainly wouldn't put it in anything that could drop in value, especially if you're looking at, you said upwards of 5 figures. I live here in New York and thinking of buying from a friend. The co-op we're staying in for 12 years, but the co-op board wants 20% down, but our bank is okay with 10%. Who decides, the bank or the co-op? You're going to have to go with what the co-op wants. The bank is just the minimum of that. If the co-op wants 20%, you don't get to trump it, unfortunately. Oh wait, I already brought that up. Is there a limit buyers should have in their bank accounts in order to qualify for down payment closing assistance? This is all going to depend on the down payment program. I haven't seen any programs that check bank accounts to see how much money you have. Have you seen that before?
No, it's just you have to meet certain criteria in credit and income normally.
Jose, this is a great question. Should I waive an appraisal on a house that I'm under contract to buy? I want to make 2 stipulations here, because a lot of people have been talking about waiving an appraisal in the past year. And what they really mean is waiving the appraisal contingency. This is because a lot of realtors keep saying appraisal waiver, and it's not a true appraisal waiver. It's appraisal waiver contingent, or waiving the appraisal contingency. And it's made for a lot of confusion. Yeah. So I'll summarize really quickly. In your purchase contract, usually there's an appraisal contingency, meaning that, hey, I'm going to buy this house for $500,000, but if it doesn't appraise, I have the right to exit the contract with no harm, and I get my deposit or my earnest money back. That's an appraisal contingency. When we were seeing really aggressive bidding wars, people were waiving that contingency, meaning that if I'm buying it for 500 and let's say it comes in at a value of 400,000, that you're willing to bring an extra $100,000 in cash to the closing table, and you're bound by that legal agreement because you waived the contingency. Some people were also putting contingency waivers with limits. I'll waive the contingency limit up to me bringing $25,000 as a remedy to cover the gap. An appraisal waiver is something that the underwriting software can issue that basically says, hey, we actually have enough data on the home that you're buying that we're comfortable with the value that you're buying it for. So the underwriting software might say, we actually know we have enough data on 123 Main Street that if you're going to buy it for 500,000, we don't even need an appraisal on it. And in those instances, I think it's beneficial to waive the appraisal because it's going to speed up the process. It's going to save you the money on the appraisal. And what I see a lot of people think is they think the appraisal is beneficial, and they want it to they say they want it to come in low. You don't want your appraisal to come in low. The appraisal does not protect you. In some instances, it might have a little bit of a value in that way. The appraisal is only for the lender. The main client of the appraisal is the lender. All they're looking to see is if they're going to give you $500,000 and you don't pay them back, can they sell your home for the amount that they gave you for that home? When an appraisal comes in short, it can very easily kill the deal or cost you extra money and a lot of time and frustration. So in those instances, I usually would always go for taking the appraisal waiver from the underwriting software. I would not recommend waiving your appraisal contingency.
Make sure you get a home inspection though.
Yes.
If you're not going to do an appraisal, please get an inspection. Do something, because I've had horror stories where people moved in and within a week or two the furnace goes out, the roof's leaking, all these other things, and it's just a horror story.
Drew's on the opposite side. He never uses a property inspection waiver on a purchase, or would never suggest it. What's your stance on a appraisal waiver?
Me?
Mm-hmm.
Like I said, I would get if I'm buying a house and for some reason my underwriter came back and says you don't need an appraisal, I'm okay with that as long as I got a really extensive inspection. Mm-hmm. The value is, I guess I'm willing to pay that value, and if your realtor did their due diligence and everything, and I really want that house, I'm already willing to pay $500,000 for it, so I'll take it.
Yeah.
But I just don't want something wrong with the house.
Yeah. Please don't misinterpret me saying an appraisal and an inspection are different things.
Yeah.
An inspection is for you, an appraisal primarily is for the lender. Again, it can have some benefit of but appraisals are so subjective, just as the purchase price is, that it is not the guarantee of what the market value is. It's what one appraiser's opinion is of that home, relative to the lender's risk of giving you a loan for that home. Please get an inspection. Never waive your inspection, especially if you're like me and you don't know, what could be wrong with a home. I can look up stuff on YouTube to fix it, but I'm not not a super home oriented or home repair guy. So I would rely on a professional to actually inspect the home and tell me if there's things that need to be fixed with it. Drew said, Dan is right. I forgot about home inspections. Yes, please get a home inspection. Rasheal, considering the time now, what according to you is a better option? A 5-1 ARM at 5.875 or a fixed loan at 6.75? ARM requires 20% down and a fixed requires 25% down. I'm curious, what programs are you looking at that are requiring so much money down?
In different rates. Why the different rates? And
so it sounds like ultimately the question, I would love for you to reach out to us and see, I'm curious as why you need such a large down payment and why you would need 25% down payment on a fixed deal, unless you're buying a multifamily property.
Yeah, that doesn't make much sense.
I'm a little
I bet you
confused there.
it might be an investment property, but that
Mm,
5.85 rate seems really. What was the 6 point? What was it?
6.75 for the
That's a
fixed. For an investment property, that'd be killer.
yeah. I'd probably take the arm, and then if and when rates drop, I don't know. 2.6. I'd have to know more about the scenario.
Yeah. How do I get a first time buyer grant? I have bad credit, 660. That's not bad credit. My income is all over the place, but I just got a settlement, so I have enough to put down 3.5 and have a little extra for emergencies. We're gonna go over some grants or different down payment assistance programs soon, and kind of cover some of those ins and outs a little bit more. Do you have any thoughts here?
No, I mean, 660 credit score isn't that bad. You just have to make sure that great job at you getting 3.5% for the down payment. But you might be able to get into with some of the money. We may be able to get your credit scores up. So if you have a chunk of money with a settlement, if we can get your credit scores up, you might only need 3% down. But if you're probably going with an FHA loan with a 3.5% down. So your credit scores, that's the right way to do that. So whatever mortgage company you're going with that, so it's the right way to do it, and that's probably the best program with your credit score. But it depends on how much money you got in settlement. Can we use some of that money actually to clean up some of your credit to get your credit scores up? That's where I
Yeah.
would put my use.
Drew said, "What's a 5-1 ARM 2.6?" The 2.6 is referring to the adjustments on the interest rate, the lifetime cap and the yearly caps. Emmanuel, what advice would you give to a first-time buyer on making offers now that the prices are slightly going down across the board? Offer strategy advice, please. Neither of us are real estate agents, but do you have any thoughts on offer
Here's
strategy?
what I would suggest you not doing, and I think this is going to run rampant at the beginning of the year. I think everybody's going to start coming in with the low ball offers. If the house is worth 500,000 right now, I don't think you're going to be able to go in at 450, because you got to remember, back in 2008, people were forced to sell. So at that time, a lot of times you were renegotiating with the bank because the people were walking from their homes. So nowadays, a lot of people don't have to sell. So you want the property, but it is, how desperate is the seller willing, how much are they willing to, do to get out of the property? So I would probably take about a 5 or 7% chunk off of that, or haircut off the price, maybe up to 10, and offer that, and then kind of see where it goes. But I don't think that people are going to be giving their houses away in 2023.
I understand you need to move in within a few months under a primary residence purchase. What time does it take? If renovation is longer, then you only have to move in 60 days after you're able to move into the home. So, depending on what renovations are required, you're gonna have like a certificate of occupancy that's issued, and then it'd be within 60 days after that's issued if you're doing renovations. Brown Rabbit 8, I got an offer for a new job. I won't start till mid-December. When should I apply for a pre-approval? I will be co-signing with my spouse who already has an income.
I would look at if it's the same line of work, it's kind of, and you're salaried, it's an easy transition. Now, if you're going from a salary job to a commission or bonuses and all this other stuff and want to use that, it's going to be really tough. But if you're just taking a W-2 salary job from one place, moving, making a little bit more money in another place, and it's salaried and the same thing, it's going to be a moot point. We can do that at any time. Some lenders might need one paycheck once you start the new job before you can close. Others might be able to be okay with an offer letter. But as long as you're still working at that old job when you close, you'll be okay. But if the new job is going to be there, you just make sure you inform your loan officer what's going on so they can help guide you through that process. But again, just focus on the income. If it's salaried, but if you're commissioned and you've been in the same line, you might even be able to use the commissions if you average it. That's a wide open scenario. So Please, get advice from your loan officer on the specifics.
Yes. Just started the underwriting process this afternoon. How long does underwriting take? Is it common for loans to get denied by the underwriter? Not common, as long as your loan officer is doing all the work that they should be doing up front.
Yeah.
You
Yeah.
shouldn't be running into those denials. How long does the underwriting process take? The underwriting process it has different steps to it. So when a loan officer takes your information, hands it to an underwriter, normally you're going to expect to see an answer back within 2 days, kind of as an average across the board. A lot of lenders are turning that around in about 1 day. And then what will come back is the underwriter will give you a conditional approval. They'll basically say, hey, your loan's approved. We just need X, 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 and X. And so usually that's a home appraisal, a clean title report, homeowner's insurance quote, and then anything that may have been missed or they have extra questions about, like an extra page of bank statements or something along those lines. That process, you hand those things to your loan officer. They'll do the appraisal and title for you, but if they need anything from you, you hand it to them. They'll give it to the underwriter. It takes about a day to hear an answer back. So the whole process, start to finish, from being under contract to closing, is going to be an average of about 3 weeks. But in the underwriting process happens in there. Since it happens in parts, it's not just like one stage. So it's a little bit of a complex answer. Justin, question about homeowners insurance. How much coverage is too much, and what must you ensure you have? $50 for mid-tier insurance and $120 for higher tier. As far as like setting up your monthly payment, this is going to be mainly based on your deductible. Definitely get something that you realistically could pay. Don't set a deductible that's going to hurt you in the future. And a way to determine that is, if you had to pay that deductible the day after you move in, would you be able to do that right now? I think is a really good place to set your deductible. Don't just go say, I'm going to have a $10,000 deductible and I'll hope that nothing happens. Is usually not a great strategy there. And most insurance is going to be based, at least with lenders, is going to be based off of a, why do I want to say rebuilt cost? What's the word for that?
Oh yeah, I was going to think of the same thing.
Cost to rebuild. Why am I blanking?
Replacement cost.
Yeah.
What did they call it? Replacement cost.
Yes. It gets that point in the live stream where you're like,
Guys, I apologize. I'll be on here for about 5-10 more minutes. I got to call it a day. I'm wiped out. I had to go down to South Chicago half the day. It was brutal, the driving and parking and everything else.
10 minutes ago, I just got hit with that wave of like, oh my gosh.
Yeah. This is, you know what? I can't believe we have this many people on here for this long. So maybe could we do 2 or 3 more and then we'll call it off? And guys, we'll be back next week. We're going to make this a weekly event. So if we didn't answer your questions, you can even feel free, leave them in the comments down below. I usually try to go through my comments and answer, but if you email, we promise we'll reply on the emails.
Yes. The Drew not reply. I didn't reply to Drew. That was a one-off thing. Nita, is it a good time to buy a house or wait till 2023 in GA? I think you need 3 things to buy a house. Number 1, you're comfortable with the payment. Do not stretch yourself thin. Unless you care about your house and you want it to be all about your house and you're willing to pay money, like tons of money for it, great. But please do something that's comfortable, that's manageable. You can always go up in your monthly payment if you want to buy a bigger house. Don't buy something that is going to be uncomfortable. A way that you can test this is make practice payments. If you're looking at a home and you pay $1,000 a month in rent right now, and you want to buy a house and you know it's going to be $2,000 after talking to a loan officer, take an extra $1,000 and for the next 3 months, set that aside in a separate account. See how it feels for your budget. Number 2 is making sure that after you close on your home, so after you pay down payment and closing costs, you have at least 3 months worth of expenses. 6 months is even better. And then finally, you plan to buy for at least, you plan to live on your home for at least 5 years. If you have those 3 things, I think it's a good time to buy no matter the market. Nobody can control the market, and I think it's kind of pointless to try to estimate what's going to happen. So it's kind of where I feel with it. Drew said a one-off thing. Shake my head. I know. I'm so sorry. Usually I try to make a point of like being really good at replying to emails. Yeah. What's a soft credit check pull? Could you explain it? Yes, Francisco, a soft credit pull is basically where a loan officer is only going to look at, let me back up a second. Things like Credit Karma, all the ways you find your credit score online, those are soft credit pulls. They don't impact your score. However, they're not the most detailed way to view your credit score because lenders use a different scoring model. They use different types of FICO models, and usually the soft pull is going to be something like a Vantage score that you see online. And the way I like to think about it is a soft credit pull is almost like seeing your credit score with a blanket over top of it. It's like we can kind of make out the shape of it, but it doesn't show all of the details. So for instance, you can take a look at one of your bureaus and see what the score is, see a general range of your score, see things that could be cleaned up, but you can't get a pre-approval with a soft credit pull. You will need a hard credit pull. A hard credit pull only impacts your score 0 to 5 points, even though things like Credit Karma are going to act like it's the world's falling apart because you got a credit inquiry. That's just simply not the case.
I did create a website, a credit website. I just put it in the chat thing. It's called creditscoresandmore.com. If you actually go to that website and you scroll down just a little bit, it actually says get your own credit scores. What that is, that's a soft pull. So when you pull it on your own, you're not going to be hit as a hard credit pull against you. So if a lender or a creditor pulls your credit, it's a ding on your credit score. If you go there, if you scroll down just a little bit, I think it's up the top a little bit. It says scroll up, your real credit score right there. The second one, up a little ways, up one more. Yeah, you can.
Oh, I'm sorry.
Yeah, no, that's it right there. It's called My FICO. Then click that. Sorry, I'm trying to watch this on my
You're like
phone.
2 seconds behind.
Right there. that system right there will give you your actual. It'll give you the same report that we get. And if you need an explanation on, how to watch that and whatever, check out, I got a lot of videos in regards to that, but that is actually your FICO score. That's what all the lenders will use. And when you pull that, it's interesting because it'll show you multiple scores. It'll say the TransUnion, here's your TransUnion car score. Here's your TransUnion mortgage score. Here's your TransUnion credit card score. So there's a variation of information there, but that is a fantastic system, and that's a way for you guys to get your own soft credit pool and have it in your hands.
Yep. Oh, there it is.
And on that note, I apologize, but I'm going to call it a night, folks.
I think it's a good plan.
Okay?
We probably need to wrap this up. So Dan and I will be doing this live stream next Wednesday. We're going to do it at 6 p.m. Eastern. We'll put something that will pop in your YouTube feed. So go ahead and subscribe to this channel. Subscribe to Dan's. Just search Dan Frio on YouTube, and he's there. We work together on the same team. We're both licensed in all 50 states. We work with over about 84 lenders. Actually, just slightly more than that, about 84 lenders. So we'd be happy to help you. You can go to winthehouseyoulove.com. We can connect you with a real estate agent if you'd like, or you can schedule a call with a loan officer on our team if you'd like to get a free quote. No obligation. So thank you so much for being here. Feel free to email me if I didn't answer your question, which I'm sorry we can't get to every single person's. We've been here for almost 2.5 hours, and I feel like I've been hit by a little bit of a truck, just a small truck. After rapid fire Q&A for 2.5 hours, it's a little exhausting. So my brain is about mush. But seriously, thank you so much for being here. We really appreciate the questions that you have, and we're excited to help you again next week. And through that, in the meantime, email us, comment on our videos. We're both extremely active. And I will reply to Drew, I promise. And next time, ask me.
Forward it to me and I'll reply to Drew.
All right. And Maxine, you said I missed the live. I'm late. It's okay. We're going to have another one next week. It's going to be 6 p.m. Eastern. I'll pop it in your YouTube feed so you can see it. You can have it, notify you when we go live. And you can always click the notify button somewhere down here. Subscribe, click the notify button. Or I think it's the bell icon. It's going to let you know when I go live. Do the same thing on Dan's channel. It'll let you know when he goes live, and then you'll have live access to us as well. Okay? Have a wonderful night.
Happy Thanksgiving, everybody.
And happy Thanksgiving. We'll talk to you all soon.